Imagine a market that never sleeps, where opportunities bloom at every moment and possibilities stretch as far as your ambition can reach. Welcome to the exhilarating world of cryptocurrency trading, a realm that is as innovative as it is unpredictable. In this journey, you will unlock the basics and uncover advanced strategies that empower you to navigate digital markets with confidence and clarity. Today, we embark on a step-by-step exploration designed to address common beginner challenges and demystify the language of trading. Our narrative flows seamlessly from the fundamental question of what trading is, through varied trading types and essential terminology, and onward into the sophisticated arenas of technical and fundamental analysis. We will explore strategies like risk management and swing trading, helping you build a robust foundation to execute informed decisions in an environment where every moment is a learning opportunity. Let your curiosity be your compass, and allow each idea to strengthen your resolve to master this dynamic financial frontier. Let us begin by delving into what trading truly means. Trading is the process of buying and selling assets with the aim of earning a profit from changing prices. In cryptocurrency trading, this process revolves around digital assets like Bitcoin and Ethereum, where every transaction is a step into uncharted territory. Unlike traditional markets that adhere to strict hours, the crypto market operates non-stop, challenging you to stay alert and adaptive. This round-the-clock environment means that opportunities for profit are endless, but so are the challenges. Picture a bustling digital bazaar with traders from across the globe engaging in a constant dance of supply and demand. Understanding trading involves not just recognizing these price movements, but also understanding the mechanics behind them. Every fluctuation in value is driven by market forces, investor sentiment, technological breakthroughs, and even global events. When you appreciate that trading is as much about analysis as it is about emotion, you begin to see that every challenge is also an invitation to learn. As you take your first steps into this digital marketplace, you will encounter a variety of trading styles designed to suit different approaches and lifestyles. Let's explore these varied types of trading. Day trading, for example, is a strategy where traders open and close positions within a single trading day. This method demands rapid decision-making and a keen eye for short-term market shifts. Alternatively, swing trading offers a blend of patience and agility. In swing trading, positions are held over several days or weeks, allowing you to capture profits from market swings without being glued to your screen every minute. There's also scalping, a fast-paced approach that focuses on profiting from very small price movements, often requiring deep concentration and quick reflexes. Each of these methods has its nuances and risks. As you decide which approach resonates with your personal rhythm and risk tolerance, remember that every trader's journey is unique, and experimentation is a vital part of finding your niche. Over time, the experience you accumulate will help you fine-tune your strategy, merging the art of timing with practical insights gleaned from market behavior. Understanding the language of trading is essential to building a solid foundation in cryptocurrency. Let's break down some of the basic trading terms that will become second nature to you over time. A bid is the highest price a buyer is prepared to pay, while an ask is the minimum price at which a seller is willing to let go of an asset. The difference between these two prices is known as the spread, a critical indicator of market liquidity. In addition to these, terms like leverage, which allows you to control a larger position than your actual capital might otherwise permit, introduce both the promise of amplified gains and the risk of magnified losses. Then there's volatility, a term that encapsulates how dramatically the price of an asset can swing over time. And of course, position sizing is an art form in itself. It is the strategy behind deciding how much of your capital to commit to a single trade. Grasping these concepts equips you with the basic lexicon of the trading world, forming a bridge between raw data and a comprehensive understanding that will serve you well in each subsequent step of your journey. Beyond these fundamental terms, you will learn that every element of trading is interconnected. Visualize the market as a vibrant ecosystem, where each term and each strategy contributes to a complex web of decision-making. For example, consider the impact of volatility on your chosen trading style. A market with high volatility presents both richer opportunities and greater risks, influencing how you decide on trade entry and exit points. With each concept explained, you are not merely memorizing terms. You are developing a mindset that will allow you to decode the often intricate language of the crypto markets. This mindfully built vocabulary becomes your toolkit, enabling you to interpret visuals, understand charts, and ultimately make informed decisions that are anchored in both logic and experience. Now let's transition into a deeper exploration of technical analysis, the art of deciphering market movements through visual and statistical tools. Technical analysis is a revered method that helps traders forecast future price actions by studying historical data and chart patterns. It is here that moving averages, candlestick charts, and support and resistance levels converge to form a visual narrative of market behavior. Imagine the candlestick, each one a compact story of market activity that reveals the tug-of-war between buyers and sellers. Recognizing patterns like doji formations or engulfing candles can hint at potential reversals or continuations in the trend, instilling a sense of clarity in what might seem like chaotic data. Yet, technical analysis is not conducted in isolation. It's complemented by powerful tools that can transform raw data into actionable insights. At this juncture, we introduce an exciting opportunity that dovetails perfectly with our technical analysis exploration. Consider a platform that marries robust analytics with intuitive design, allowing you to visualize complex data effortlessly. This tool, recommended for emerging traders, provides you with real-time insights, alerts, and detailed charts that bring the principles of technical analysis to life. Picture how dynamic it can be to see a moving average cross signal, a potential entry point, or how identifying a clear resistance level could inform your exit strategy. This integrated tool is not just a feature, it's an indispensable companion in your quest to master the markets. With its assistance, concepts like Fibonacci retracement levels and Bollinger Bands transform from abstract ideas into practical, real-time strategies that empower you to trade more effectively. Transitioning from the visual precision of technical analysis, we now move to the realm of fundamental analysis, a method that dives into the underlying forces driving asset values. Unlike technical analysis, which hinges on charts and historical data, fundamental analysis investigates the intrinsic value of a cryptocurrency. It looks at the technology behind blockchain networks, the impact of regulatory shifts, and the broader macroeconomic trends that could influence market behavior. Imagine sitting down with the latest industry reports, discerning how technological innovations and shifts in investor sentiment can reshape market landscapes. Fundamental analysis is the tool that enables you to make well-rounded decisions by connecting market behavior with real-world events. It invites you to consider not only the numbers on a screen, but also the technology, the team, and the community behind each crypto asset. When you develop a habit of diving deep into these factors, you add another layer of security to your trading decisions. In a rapidly evolving sector like cryptocurrency, staying informed becomes a crucial asset. Every day brings new developments, from regulatory changes that could shift market dynamics to technological breakthroughs that promise to disrupt traditional financial paradigms. Fundamental analysis provides a structured way to sift through the noise and identify genuine long-term trends. It cultivates a mindset of continuous inquiry, where every news article, every technological advancement, and every market rumor could hold the key to your next big decision. By merging this broad perspective with the precision of technical tools, you create a powerful, integrative approach to trading. The dance between fundamental and technical analysis is not one of conflict, but of complementarity, a dual lens that offers both a detailed and holistic view of the market. Now that you have a grasp on both technical and fundamental methodologies, let's turn our attention to a cornerstone of successful trading: risk management. Mastery in trading is as much about protecting your capital as it is about making profits. Effective risk management strategies are designed to safeguard your investments and to help you navigate the market's inherent uncertainties. One of the most important tools in your arsenal is the stop-loss order, a safeguard that automatically exits a trade if the market moves against you. This practice prevents a small loss from snowballing into a major setback. Moreover, careful position sizing is imperative. It involves determining how much of your capital should be allocated to any single trade, usually a small percentage, to ensure that no one mistake can jeopardize your entire portfolio. Consider the significance of diversification in your trading strategy. Rather than betting all your capital on a single asset, spread your investments across multiple cryptocurrencies. This approach reduces the risk associated with a downturn in any one market segment. Risk management is not a static technique, but a dynamic process that involves constant vigilance and adjustment. It is about preserving your ability to trade another day by learning from each market movement. Cultivating emotional discipline is equally important. The crypto market is notorious for its dramatic swings. Fear and greed can cloud even the most seasoned trader's judgment. By adhering to a well-thought-out trading plan and maintaining a cool head during volatile moments, you transform uncertainty into an opportunity for growth and learning. Every decision you make, every calculated risk, fortifies your ability to navigate the unpredictable tides of cryptocurrency trading. Building on these protective strategies, we now take a closer look at swing trading, a balanced strategy that captures short to medium-term movements in the market. Swing trading strikes a harmonious balance by allowing you to hold positions from several days to a few weeks, thus capitalizing on broader price movements without the constant pressure of day trading. In swing trading, timing is critical. You learn to identify entry and exit signals through a combination of technical analysis techniques. For instance, moving averages may indicate when the momentum is gaining enough strength to justify a position, while chart patterns like head and shoulders or double tops can hint at a potential reversal. These signals help you to decide not only when to jump in, but also when to gracefully withdraw, ensuring that you maintain a balanced portfolio of trades. Imagine a scenario where market trends emerge with subtle cues, a slight upward shift in price followed by a resistance level test. Here, your analytical skills come into play, transforming the seemingly ordinary fluctuations into strategic insights. Swing trading, in many ways, is akin to riding a wave. You learn to anticipate the swell and the retreat, harnessing the power of momentum while respecting the natural ebb of the market. This method requires both patience and precision. It is not about chasing every minor price change, but about identifying significant movements that can enhance your portfolio over time. Each swing trade you execute is a step toward a deeper understanding of market psychology, a practical lesson in timing and risk management that reinforces your overall strategy. As our journey of exploration nears its conclusion, let us focus on practical tips that consolidate all the concepts you have learned. Successful trading is a continuous learning process. One of the most valuable habits you can cultivate is meticulous record keeping, tracking each trade, analyzing outcomes, and refining your strategies based on experience. Reflect on both your successes and setbacks. Each experience, whether it results in a gain or a loss, is a stepping stone toward mastering the art of trading. Set clear entry and exit points for every trade and adhere to a well-defined plan that aligns with your risk tolerance. Constantly remind yourself that the market is both a teacher and a challenger, ready to reveal valuable lessons to those who remain patient and observant. Furthermore, never underestimate the power of education. The cryptocurrency landscape evolves rapidly, making continuous learning not just beneficial, but essential. Engage with community forums, follow market news, and invest time in studying both technical indicators and fundamental drivers. By staying informed, you make decisions that are grounded in the latest market insights, and you remain adaptable even when market conditions change unexpectedly. Remember, successful trading is not about hitting a jackpot. It's about being consistently informed, adapting your strategy, and growing your confidence through every well-thought-out decision. Visualize your trading journey as a series of interconnected steps. You've learned what trading is and explored various types that cater to different lifestyles. You now speak the language of the market through key trading terms, and you have seen how technical analysis can transform charts into narratives. With fundamental analysis, you understand the underlying forces shaping asset values. Risk management has equipped you with the techniques to protect your investments, and swing trading has shown you how to capitalize on market rhythms. Every chapter in this narrative builds upon the last, forming a comprehensive guide that empowers you to approach cryptocurrency trading with both caution and creativity. As you step into the market equipped with this robust toolkit, embrace the reality that every trader faces challenges. Financial markets, especially in the volatile realm of cryptocurrency, are as unpredictable as they are exhilarating. Each trade is a calculated risk, a decision where knowledge, technique, and discipline intertwine. In moments of uncertainty, draw on the principles you have learned. Trust in the data provided by technical charts, the insights drawn from fundamental analysis, and the safeguarding strategies of risk management. With every hurdle you overcome, your skill deepens, your strategies refine, and your confidence strengthens. Now, as we close this educational journey, it is time to transform knowledge into action. The digital frontier of cryptocurrency awaits your exploration, offering both challenges and rewards. Every concept we discussed, from the basics of trading to the intricacies of technical and fundamental analysis, is designed to form the foundation of a disciplined yet innovative trading practice. Your path to success involves continuous learning, persistence in the face of volatility, and a balanced approach to risk. Embrace every insight as a stepping stone towards financial empowerment and personal growth. Ready to embark on your cryptocurrency trading journey? Start by choosing a reputable exchange, educate yourself on market trends, and develop a solid trading plan to navigate this exciting financial frontier.